Hey YouTubers, and welcome back to my channel. So being the beginning of May, this means a lot of companies just shared their quarterly earnings. So therefore this video I'm going to be talking about how the grandfather of investing parted his wisdom on us, how Microsoft is squaring up to Zoom, how Tesla lost $14 billion in 7 words, and how Boeing shows why cash is king. On May the 2nd, we saw the annual Berkshire Hathaway shareholders meeting, which is usually like the Oracle from Matrix, letting the world know what is going on in the market. So the grandfather of investing joined us with Greg Abel at the very first quarantine live stream version of the Berkshire Hathaway shareholders meeting, which is usually a huge weekend affair, where last year 40,000 people attended. However, for the first time in probably the 60 years that Warren Buffett has been doing this, he didn't have his right-hand man, Charlie Munger. Charlie, being 96 years now, it just did not seem like a good idea to get him exposed to the Rona. However, Warren Buffett did reassure us that Charlie is in fine shape and is doing great. Now, straight away, Buffett addressed the virus and essentially compared it to 2008 financial crisis, where he said that the trains fell off the tracks then. However, for this time period, we just pull the train off the tracks and put it on the side. Basically saying that we're in a position right now where there is just too many unknowns and we just really don't know what's going on with the market. Buffett then went on to say that he can't advise anything about the markets over the next 2 years, but he is all about the long game and said everyone should never bet against America. He then went all Avengers on us and brought up the Civil War. But I think he was gearing more towards the American Civil War back in the 1800s, where 6% of the prime workforce died. However, the American miracle has always prevailed, he mentioned. Now, obviously, the question came about of how should we invest right now? As always, Buffett advised the average investor to buy index funds that hold S&P 500. Now, this has been something that Buffett has said for years. However, personally, I would say the FTSE 100 rather than S&P 500, just purely because the dividend yield that you get from the FTSE 100 is a bit better than your S&P 500. Now, one of the other major things that came up on the call was that Berkshire Hathaway bailed out on all of their airline stocks. Now, that's $6.5 billion spread across 4 airlines in the US. He did mention that it's got nothing to do with how the companies are being run, but more so around the social impact of the pandemic. Now, obviously, one of the main things that everybody wanted to know was the numbers of Berkshire Hathaway. So, operating earnings, $5.871 billion, which is up from $5.555 billion in the same quarter last year. Whereas investment gains of Q1 was at minus $54.517 billion. Now that's down from $15,498 billion in the same quarter of last year. He then went on to show the losses of net earnings per A share and per B share. He then went on to talk about Q1 cash and equivalents, where Berkshire Hathaway are sitting on $137.263 billion. Therefore, Berkshire Hathaway is in a great position sitting on a cash pile of $137 billion, bringing home the well-known saying of cash is king. Berkshire seems fine even when they lose $50 billion in a quarter. Now, Buffett did say, however, if the right company comes along, he will have no hesitation to invest or buy them. But as it stands, no company has come about that has sparked his interest. Now, obviously, there was lots more said in the almost 6-hour-long meeting, but these were the key points that I took from them. You can always find the link below for the full video if you want to find out more yourself. So, during this time of turmoil, where we have the all-knowing, all-seeing oracle of investing losing $50 billion, there are a few companies that are doing pretty well. One of them is Microsoft. Satya Nadella reveals an extremely strong quarterly earning due to the success they are gaining from their cloud business, which is helping to overpower the corona-related loss from their physical sales of laptops and tablets. Now, where lots of companies are feeling the pain of the coronavirus, Microsoft managed to pull in $11 billion profit, which is an increase of 22% compared to the same quarter of last year. Now, one of the main reasons for Microsoft's great success this quarter has come about by going toe-to-toe with another company that has had a great couple of months. Now, this other company is, of course, Zoom. While everyone is jumping onto Zoom video calls with their family and friends every week to do pub quizzes and play games like Codenames and Cards Against Humanity, behind the scenes, in the corporate world, Microsoft decided they have a piece of software that could go head to head with this increasingly popular space due to remote working becoming a must for almost 95% of companies around the world. Now, Microsoft's workplace tool, Teams, has been referred to before as the less sexy version of Slack. But when your daily users jumped 70% from March to April, I don't think Microsoft really cares. There's also been a lot of speculation over Zoom's security due to the rapid growth in the last few months, whereas Microsoft is already perceived as a secure company. And most companies are already using Microsoft Office 365. So they claim, why not just use Teams, which is already in your Office suite? Now, another company that's hit the headlines this week was Tesla. Now, this was for more than one reason. The CEO, Elon Musk, seemed to be going through, as the guys over at Robinhood Snacks mentioned, a Kanye West kind of moment. But essentially, the real-life Tony Stark decided to have another outburst. Initially, it was great news. Tesla made a surprise profit, making it a third consecutive quarter of profitability. The main surprising factor here is that their key production houses in Shanghai and the Bay Area have been forced to close down. However, thanks to cutting costs and the increase in sales, they were still able to generate a profit. But don't forget, this time last year, Tesla reported a loss of $702 million, and the profits this quarter was only $16 million. Therefore, Tesla's not quite the best company in the world yet, after 15 years of reported losses, but they are going in the right direction and disrupting the whole car industry. However, as I mentioned, there was also a Kanye West-style rebellion outburst, and this was posed towards the US government, where Elon said that the coronavirus lockdown is basically forcibly imprisoning people, and then went on even further to call it fascist. But that wasn't really the tipping point. It all went belly up when Elon Musk decided to follow suit with the almighty Donald Trump and got his thumbs dirty on the Twitter sphere, where 7 little words ended up costing Tesla $14 billion, simply because Elon decided to tweet, "Tesla's stock price is too high, IMO." IMO basically saying, in my opinion. Now, those 7 words on Twitter ended up costing Tesla $14 billion, with their share price decreasing. Now, the few words that Elon Musk regularly puts up on Twitter world has cost him dearly in the past, financially, so much so that Musk ended up agreeing to have all further posts on the platform pre-screened by lawyers. This agreement obviously seems like it's probably been broken. Or maybe Elon was just smoking weed. Who will ever know with Elon Musk? But with Tesla doing well and producing profits on one hand, and then Elon Musk saying that the company is overvalued on the other hand, there is one thing that is for sure, and that's that Elon Musk likes to keep us on our toes, especially when one of the largest auto companies in the world, Ford, expected to make a $5 billion loss for this quarter, and Tesla reported a profit. This shows that there's definitely something that Tesla is doing right. So, now to move on to Boeing, one of the largest suppliers of planes in the world. However, if you thought that the airlines had it bad, Boeing probably has it worse, as their demise began before the corona pandemic even struck. All of their 737 MAX planes were grounded after 2 of them had crashed. With hundreds of these planes being stuck in car parks, this has been causing billions in losses for Boeing. Then we have the pandemic, of course, which has affected every single one of their customers. Boeing's delivery of planes reduced 66% compared to the same quarter last year, so from 149 planes to just 50 planes. But this makes sense as all the airlines are going through a complete demise as no one is flying. However, with both of these major issues, Boeing's investors were actually expecting news to be a lot worse than the reported $4.7 billion loss. Therefore, they had to make some adjustments by ditching dividends and cutting 10% of their employees. Now, with all that bad news, things are not so terrible for Boeing. They might not be at the same position as Berkshire Hathaway, but they are sitting on a $15.5 billion cash bar and a $9.6 billion credit line, which will keep them running along smoothly until the markets pick back up. Now, there's a lot more going on in the markets, but these were the top picks from me. Now, if you like this video, drop a comment below to let me know what other companies you want to hear more about. Also, if these videos prove to be more beneficial, I'll do them a bit more frequently. As always, don't forget to subscribe and hit the bell button so you know when the next video is coming up every Monday and Thursday. And don't forget to like, share and comment. See you again on the next video.